Okay, so I wanted to just kind of give a little bit of a thought process and just kind of show specifically what it is that I'm talking about. I'm recording this, so if it's missed, I can just post it later. Hopefully, everybody can, if you have questions, ask them in the bunker. So hopefully, this could be helpful. But essentially, we've gone from 316.50 to 358 in a straight line on the Qs. We've broken through every level of resistance until we hit, excuse me, until we hit today's um, 200 EMA. So that's right here. And it's to say it's no different than what we did here. Let's use this arrow where we banged up against the 50 day. The primary difference is like where we're coming from and where we're at. And then like some of the names that have moved on the back of this. So we've had like Amazon going from call it 2,800 to 3,300 in a straight line, and then stalling out at the 200 day. So after moves like this, generally you get these consolidation periods. So you'll get, and it doesn't have to be long. You'll just get some form of back and filling. And that's just a product of some people trying to take profits. It's a product of having been parabolic, like just draw this line out on Amazon, for example, having been parabolic for, since March 14th. So uh, 2 weeks basically. And so when you get these moves, you end up having the index itself, whether it's the SPY or whether it's the NASDAQ, you end up having the index itself come up against resistance, and then you'll have individual names. So in this case, like Amazon, come up as resistance, come up into resistance as well. And so when you see that, it's kind of like a situation where you, for the bigger names, except for the ones that are breaking out and showing strength. So for example, Apple is breaking out. Excuse me. Excuse me. Choked on my water. So Apple is breaking out of a downtrend, for example, and all of its moving averages are below. So you'll have outlier instances, or you'll have instances where you'll have strength. This is an example of one. But by and large, what you're going to see is, and this is another example that could be if it breaks out. But by and large, what you're seeing is things like Amazon, and then things like Tesla, which gets to its 100-day, breaks above, but just kind of stalls out, right? And so I say all this because, when you have these parabolic and these, aggressive moves to the upside, what you want to do is you want to monitor where your hourly support is and see kind of like where that lines up relative to where you know, index pivots or um, some of these moving averages on broader terms, right? So in the case of the Qs, you've got the 20 EMA just on an hourly basis riding up here. Then you've got like a large gap between 355 and 344. So what you're marking this 353, 352 level and saying, okay, if we're going to hold this level, it gives me an opportunity to get long back up to this 358 level. And then you also want to do is you want to take the daily moving averages and throw those up on a pivot as well. So generally one mistake that people make, and I'm guilty of this too, is sometimes you'll see um, a wide range between the 20 hour and the 200 EMA hourly, and you'll say, oh, there's a lot of downside here. But what you'll forget to do is pull up, the daily and see that there's actually support at the 350 level. And so I say all of this because I want to bring up Tesla in particular, because I was just talking about Tesla in the channel. And in the case of Tesla, we had it really just run up and fail, basically where it started to fail back in January. So that 1040 level, basically. And then generally speaking, Tesla on an hourly basis will show an aggressive fail. So as you can see here, I've been talking all morning about how the stock looks like it's running out, and you've got the 5 hour support it'll probably be held. And if you go back to the channel or the every time I cash channel that we were talking in, or that I'm talking in, I mentioned very, very explicitly that it's probably going to come down and retest that 100-day. And the primary reason for why I say that is one, you've got just such an exhaustive move to the upside. And I shared, let me see if I could find it here in a second, but I shared a chart of Tesla and how it generally moves about 40% to the upside, and then it'll it'll stall out at that point, right? So what I'm trying to say is you want to find these historic patterns, number one, and then you want to apply these historic patterns to where you are in the move to kind of give you an idea of where to accelerate. I can't find it, so I'm just going to try to do it again. So here's one. You've had 33%, and then you get another one from here, let's say up to here, again another 34%, and then one more was from this low, and you can mark it up here, and this one actually kind of blew off even more, so 37%. So you get these violent moves to the upside in Tesla, and then what ends up following is some sort of stall out, and so probably what you're going to see in the next couple of days is another attempt and another failure at a rally, and then some sort of back and fill. So I'm not saying that Tesla's going to come down and do what it did here and give everything back. I don't necessarily believe that in this instance. I think you might go a little bit sideways and then try again, but any door is open at this point. But essentially, what you're trying to do, if you missed, a large chunk of this, or if you were interested in getting long today, and it's obviously not the right move at this point, what you're trying to do now is you're trying to identify, like, one, can I short this? And if I can short this, like, what are the levels that I can short this? And the first thing that you want to know is that the first attempt generally at these levels is not going to crack unless you have a headline or unless you've got something. So in general, these attempts are not going to crack. So if you go to the Every Time I Cash channel, and I mentioned at 10:04 today that it's breaking the 5 hour, and generally when you break the 5 hour, that opens the door to the next pivot. And so today's breakout was at 1,000. We're there right now, and I'm going to just throw up the Tesla intraday just to give you a sense. The first attempt at that 5 hour was rejected, and that's, let's see if I could put it up in another tab. Yeah, so the first attempt at the 5 hour was here at this 10:09 level. So that's your first attempt. It rallies, it rejects, it holds again, and then it breaks, right? So that's kind of what you're going to see as people start to defend it. So then the next thing you want to do is you want to outline different levels that were support levels that or prior resistance levels. So right now we're at one. We're at yesterday's high, or in the close basically. So you're going to probably see some level of buyers step in at somewhere around here at this 995 or whatever. And if they don't, then what you're going to do is you're going to just all you're trying to do is identify different levels to go to, right? And so essentially what we're trying to find, trying to find these levels down to that 100-day, which in this instance it might actually get there pretty quickly, which would kind of show you what I'm saying. And that 100-day, like I said earlier, is this it's 986.07. So you can see it at the top left. It's the first number. It says MA 986.06.07, right? And so call it 986. This 986 level is going to be that push pull because that's where we kind of broke out from and went kind of parabolic in the last, you know, call it 18 hours or so. Um, and then the second aspect is when you get to these points where the stock is starting to roll over, what you don't want to do is you don't want to make a habit, again, of shorting into the bottom bands because a lot of times these bottom bands will align with the they'll either align with hourly support levels or they will align with, prior support levels. So in this case, right, so the bottom band aligns with this, 995, 997 level that it was at yesterday, pretty much on the close. And so you don't really want to press it unless you have an instance where the market itself is rolling over. So in this case, like you have the market where you've got this 20 EMA on the hourly just below. You basically got like $1.50 to get there, a dollar if that. And then you've got on Tesla, you've got that, prior resistance level here, and you can see it more clearly if I just identify it. So let me just circle it. You got, this, well, can I do this? Yeah. So you got this level right here, right? So these two candles are what I'm talking about specifically. And so when you have, a stock pressing down into that prior resistance, which is supposedly support, right? And you've got it at the bottom of the band, um, and also you had it as as support earlier in the morning today. It's not where you really want to press your bet. So the better exercise would be, okay, well, where can I find major inflection points that I can potentially see how it responds and see if it provides an opportunity for at least some sort of scalp, right? And so in this instance, you're looking at like 986 on Tesla, and then if that were to break, then you would start to open that. That would really open the doors back up. And so what you're going to try to target is, this prior, was it 970? This prior wick sits at 986, so that's a nice little alignment. So let's just draw these out and color them. I don't have a script or anything, so I'm kind of just going offhand. Forgive me for rambling. But you have, this 986 level, which is hourly support, or 981 to 986 level, hourly support. Now it was resistance, and then you're ultimately going to try to find, different pivots. And so when you align this breakdown point with, this prior resistance level, it kind of gives you a little bit of a window, right? So it tells you, and then along the way you could also add in, other pivots, right? So you could add in this pivot, for example, and that will be, 970 give or take. So what you're essentially doing is you're trying to align different points where potential dip buyers can step in. And if and when they do step in, you then want to do the same in reverse, because now we have a bunch of people today that probably chased it. So you have these people up here that are stuck, and these people are no different than, you know, these people that are stuck, right? And so once you start to identify these different levels and start to see, okay, you've got people that are trapped above, um, and then you've got also people that are trapped below. So you've got people that shorted the stock, thinking that the breakout was not for real, and then now they're in a situation where it's like when it gets back to, if they've averaged up or whatever, if it gets back to certain prior levels where they're like, oh, I should have covered there, they're going to cover. And so you're going to have this push pull, where on the long side, it's going to kind of cap out until you have the next leg up. And on the downside, it'll cap out as well, and in this instance, you've got uptrends, right? And so, um, that's essentially how you want to look at it. That's basically why it's like a consolidation, push, pull, tug of war, whatever words you want to use. That's kind of how you want to look at it. And that's kind of what you want to do. You want to identify different levels on the downside that you can potentially step in and buy for a snapback. And then you also want to identify where the breakdown levels were. So in this instance, if we just look at the five, it's at 10,007, right? So call it, 1,006 to 1,009, somewhere around there. So should it come down and hold this 986 level, it should currently, it's trying to hammer. So you could potentially go long here, for example, against this last candle. Why is it doing that? This last candle low that it's setting. So you could potentially go long against 992, right? And then give yourself an opportunity for a snapback up to that 1007 level, or if it really got aggressive, it would rally back to that 1019 level, which is this mid bull. So essentially, that's what you're doing. You're identifying different levels. You're identifying different spots that you could um, think of it, that you can think of it as like a rubber band where it's getting really elastic, and then once you let it go, it closes back up. Or, you know, in opposite terms, a coiled spring as it sells back off and comes back into an uptrend or into different pivots or different support levels, you can step in and try to buy it. And so for me, I really want to see how it behaves at this, 983, 986, because a lot of times these things are not exact, so they won't just stop down to, 986 on the nose. Sometimes it'll undercut, trap some people. But I want to see how it behaves between 980 and 986. So if we get to a point where it holds, let me go to the daily, where it holds that 986 100-day moving average and plus minus a few points. If we get to a point where it does that, gives you some sort of hammer at the bottom, it's going to give you an opportunity to potentially get back to the long side. And in that instance, I'm not looking to break the bank. I'm looking to see if it'll just rally back to a breakdown point, right? And so it doesn't sound like much. It doesn't sound like you're making, any insane uh, return, but very, very clearly, like here it is right here. You can see it 10,005. So, but very clearly, if you're doing this, 3, 4 times a week, and you're getting 15, $20 a pop, you're giving yourself an opportunity to get real returns in these consolidation, digestion, whatever you want to call them modes, right? So there's two. To sum it up, there's two things that you're trying to do. You're trying to find stocks that are, relatively strong, and you want to wait for them and show you where they start to fatigue. So in this case, Apple is relatively strong. It's like the last one that hasn't sold off really. And then you want to find the names that have rallied. So Amazon in this instance, Tesla in this instance, names that have rallied pretty aggressively. You want to find where they've uh, topped out and see if it aligns with any major pivot. And then you want to also keep an open mind that at some point it could consolidate, find support. So I'm going to do this real quick so you can see it. At some point, it could just go sideways here for a couple days, right? While these moving averages catch up. And so at some point, it could just go sideways, consolidate, 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 and then ultimately break out above. And that gives you a better setup or a better entry if it were to do that. Or again, you just look for the different pivots. And so in this case, you've got Amazon at 20, the 20 EMA hourly right here. And then ultimately you go to the daily and then you see, just below that, you've got a number of moving averages, 100, 200 EMA, 150, and the 5. And so all you're trying to do is you're trying to line up different time periods. So in this case, you're trying to line up the hourly with the daily, and then see if it gives you an opportunity to go long for some sort of scalp or some sort of mean reversion or something, right? So in this case, should it come down to 32.42, well, that gives you 100. You're basically going to have a 100-point range, right? So you're going to have, to the downside, call it 33.30. To the upside, call it 32.30, and then to the upside, 33.30, right? And so in these instances, you're then just looking for behavior. And so in this instance, like let's just assume that Amazon were to break this 20 hour and then find some sort of support. It's just hypothetical. I'm not saying this is going to happen, but find support around here, which is basically where the moving averages line up on a daily basis, and then where it found a breakout point, back a couple of days ago. So in an instance like that, all you're going to do at that point is say, okay, well now there's a potential for this thing to chop around, right? And so it gives you a 50-point range to play with. It gives you, okay, it's sold off to this 3230 level. It's finding buying support. I could potentially see a snapback to 3270 or back to the breakdown point 3300. So that's kind of like how you want to position yourself. You kind of want to think about it. And from there, you want to give yourself opportunities and essentially, should you have missed some sort of boat on the upside, call it the last day, it's not the primary thing here is it gives you a perspective of like not chasing something because it gives you an idea that these ranges are pretty wide and these moves are pretty liquid. And so the last thing that I'll say about, and this is unrelated to these two things, the last version of this is to find the names. So like Roku, for example, we were talking about this morning. Find these names that Spotify was another one that other people were mentioning. You want to find these names that have not materially broken out yet, and you want to see how they behave, right? And so, is it going to give you an instance where, some of these bigger names that have already moved start to kind of roll over a little bit, and then some of these little names that have lagged play catch up, or is it going to be an instance where they all start to roll over simultaneously? Or is take it another step, another derivative? Is it going to be an instance where they start to just play, um, you know, uh, what's it called? Forgot the term, musical chairs. So is it going to be an instance where they start playing musical chairs and they just jump from sector to sector, strength to strength, right? And so this morning, for example, you had, some of the steel names, some of the aluminum names continue to act as support. You had IPI, stuff like that. But even these are starting to show some signs of, some sort of selling pressure on a shorter time frame, not on a larger time frame, right? Daily's still really constructive. But the point of the exercise that I was bringing about Tesla and Amazon is, some of these sell-offs, should you get them, you want to outline, where is my hourly support, where's my daily support, and if I were to get, so let's say in this instance, let's say they broke the 100-day, and you pulled up the hourly, breaks the 100-day, well then you've got 960 as the 20 EMA, and by the time it got there, if it got there, right? It probably will line up with this 5 day. So then you'd have a 20-hour and a 5 day kind of line up together, and you've got this, 950 some pivot where it broke out from. So you're just setting yourself up to kind of know where these different levels are to pick your spots, potentially find some sort of snapbacks to the upside or sell offs to the downside. And um, showing you this as an exercise, like if you just went back and plotted out how some of these metal names, which are now trading back near their highs, how they traded after they stalled out in early March, they basically went back down to prior moving averages on a daily, hourly, whatever, and then when they came to these midterm moving averages, gave you buying opportunities. And so you're essentially all we're doing is we're trying to see, you know, is this going to repeat itself for some of these tech names that have run. So is Amazon, is this the move? Like, did it run up, stall out the 200, and then it's just going to repeat what we've been doing, where we run up, stall out? Like, is this going to be the move, or is it going to give you an opportunity to come back down to some of these lower moving averages? So maybe it puts in a higher low at 30, 35, or maybe it just consolidates, right? So that's essentially what we're doing. It's basically that's basically the next few days where we're thinking and how we're thinking of it, or by we I mean me, how I'm thinking of it and what I want to pay attention to. Outside of that, if there are names that have been exaggerated to the upside and have a wide distance between moving averages both on an hourly and a daily time frame, I don't have one offhand because I haven't gone through charts yet. But if there are any like that, I want to highlight them for potential mean reversion back to the downside. So hopefully that was helpful. If there are questions, I'm going to wait just like a minute. So if you have questions, just throw them in the bunker and I'll just answer. You just type them out in the general bunker and I'll be able to answer them before I shut this down. So I'll just give this about 30 seconds, see if anybody has any questions. All right. I said 30 seconds, but it's a lot of dead air when you do 30 seconds. So, if you have questions, it's gonna be like last call on questions. All right, see two coming. So just give it a second. All right. So I don't know why the market's dumping and and recording will be available later. Yes. Let's see. Is there a headline that I missed? No, I don't see a headline really. And it's likely um, some of the stuff that you saw out of Russia this morning and just a overall rallied in a straight line. You rallied like 30% in some instances on some of these mega cap names in a straight line. So you need some sort of consolidation. But I don't see any primary catalyst. But outside of those two questions, if anybody else have a question, let me know. Otherwise, I'm going to shut this down because it's kind of awkward. And no? Okay. So let's just take one last look. Tesla now rallied. So just to put it in perspective, let's do this. So Tesla now rallied, off that bottom band. That this was year before right here, right? 976 shows you. Well, it rallied off the bottom band here. Now, when you pair it, it's coming up against that 5 hour, right? So there's a chance that it overshoots, and then it finds resistance at like 1019, 1020, somewhere around there. But essentially, found support at prior. Let's go here. Found support at the prior resistance level from yesterday after the move, and now finding resistance again at that 5 hour. Okay, so let's see how it goes. I'm gonna shut this down. This will be available on the site later. So if you missed it, you want to watch it again, feel free to check it out. Okay, guys, talk soon.